Good day, you're watching Cryptex.net, the latest news about the world of cryptocurrencies and digital assets. Don't forget to hit the subscribe button. I won't pull the cat by the tail. Let's start. Hong Kong's new crypto regulation may lure Web3 firms back. Upcoming regulatory changes in Hong Kong for cryptocurrency-related services providers could attract businesses and talent back to the city, as it seeks to regain its international crypto hub position. The Hong Kong Securities and Futures Commission published draft rules for virtual assets trading platforms and sought public feedback. As a part of the new license regime set to take effect in June, the SFC plans to require cryptocurrency exchanges to apply for licenses that would allow retail investors to trade certain large capitalization tokens. Just last month, the Hong Kong Monetary Authority, the city's de facto central bank, said in a consultation document that it plans to introduce the mandatory license regime for stablecoin issuers as early as this year and will not allow algorithmic stablecoins. China banned cryptocurrency transactions in 2021, but Hong Kong has set up a new license regime that may eventually extend to retail crypto trading. Current regulations in Hong Kong, a special administrative region, allow only institutions and professional investors with portfolios of $1 million or more to trade the digital assets. To fuel the city's Web3 industry development, Hong Kong's Finance Security Paul Chang said on Wednesday that the government is setting aside 50 million Hong Kong dollars, approximately $6.37 million, to develop the Web3 sector, which has brought a golden opportunity to lead innovative development. Seems like the dragon is rolling back to the game. Wish them luck. So let's back to digital assets. Crypto exchanges face an existential challenge. A trend few have paid much attention to is the changing shape of the crypto industry spot markets, more specifically in the cross-chain space. What started on the Ethereum is spreading as technology advances. In 2020, Uniswap exploded in a good way and took billions in daily volume away from centralized exchanges, to the point where much of the price discovery for many ERC20 tokens now occurs on-chain. If the trend of the last 2 years is anything to go by, the same is likely to happen in 2023 in other markets. With the dozens of new Layer 1 chains emerging and growing, and cross-chain technology getting better and more refined over time, it has slowly become possible to swap assets cross-chain in a compatible experience to Uniswap. Even Uniswap itself is expanding to other chains. With multiple bankruptcies and collapses still filling crypto news feed, it has never been clear both to users and regulators that the industry most reduces its dependence on centralized exchanges. When it comes to transparency and user control of customers' funds, nothing beats on-chain trading through protocols rather than trusted entities. In a world of cryptocurrencies, everything changes very fast, and you must keep a pulse on. And now let's get to the treasure. The world's largest Bitcoin fund is about to have its day in a court. At stake in a fight, a 7.2 billion profit setting in a fund like sunken treasure, if only anyone could get to it. On paper, Grayscale Bitcoin Trust is the best deal on Bitcoin you can find. The fund's share price trades at 47% discount to its underwritten net asset value, or NAV, of 15.4 billion in Bitcoin holdings. If it were to trade up to its NAV, investors could scoop up an 87% gain without Bitcoin price budging. At recent prices for the token around 23.7 grand, the discount is worth 7.2 billion. Some investors view that as a bargain. JBTC makes up more than 5% of Cathie Wood's ARK Next Generation Internet Exchange Trading Fund. When there's a money to be made by closing the discount, someone's going to find a way to make it happen, says Ned Davis Research Senior Portfolio Strategist Pat Chosik, who sees JBTC potentially doubling by mid-year as Bitcoin rallies. Yet, GBTC's discount has proved impregnable. The fund's corporate sponsor, Grayscale Investments, has largely insulated itself from proxy campaign by hedge funds, which would ordinarily attack such a wide discount in a closed-end mutual fund. JBTC's discount has only widened as other Bitcoin funds have emerged, notably ETFs like ProShares Bitcoin Strategy, which holds Bitcoin futures for much lower annual fee. 7.2 billion. That's a lot of cash. I can't even imagine the size of this mountain. but I will try. You have watched Cryptex.net. Thank you all for your time. See you soon.